try and identify when we need to be countercyclical. Our exposure to battery minerals and metals is very low at the moment as a percentage, but potentially now's the time to be picking up a bucket load of shares in good companies.
Righto, money minders. I think US Masters was last week. That's why we've got Johnny Forwood on. Oh, Lowell, the man from the Lowell Resources Fund. I caught him the other week in Adelaide, actually. Mate, he'd be flying with gold at the moment.
He sure is. Talking a lot about gold, more than half the portfolio.
As the gold price is rising, mate, Johnny's punts on the junior end of the spectrum are certainly benefiting from it, and happens to make those junior gold projects a lot more monetisable because that dirt can now go into a mill, and who better to help out with that than
Mineral Mining Services. Did he mention any non-core assets that he thought might need to be monetised?
He didn't, but he does have a view of he wants his companies to be focused on their core project, and if they've got non-core projects, mate. And if they're able to be monetised at these gold prices, then hit up MMS.
Well, if you want more money to put into your core projects by monetising your non-core projects, MMS can just help you do bloody both of them as the open pit mining gurus with the tech services arm. So, Johnny, tell all your bloody mobs you're invested in, get a hold of MMS, make some cash right now.
Go MMS.
Righto, let's get into the chat with Johnny Forwood.
John Forwood, great to have you back on Money of Mine. We're very keen to chat again and get your perspectives on everything going on at the junior end of the market. How's the past couple months of volatility been treating you?
Yeah, look, thanks, guys. It's an honour to be back on, so thanks for inviting me again. Look, after a pretty tough 2024, the start of 2025, the first three months has been to date very good, with a lot of volatility within that 4 months. So as we speak right now, I've got a smile on my face.
That's probably because your portfolio is 54% weighted to gold, and that's just really having its time in the spotlight.
Exactly. Yeah, and that's only sort of by organically growing as a percentage wise.
Yeah, you don't even need to allocate to new exposures. That's just growing faster than everything else.
So what are you sort of making of the sentiment in that real junior end of the market? You focus much more early stage than the vast majority of investors that we speak with, and we hear this narrative of, when are we going to see love right down the bottom? And, you wouldn't pick that up in your returns. They've been very strong, but what are you feeling at the moment down there?
Look, it definitely improved, mainly for gold. Also, seeing some boutique metals or boutique commodities do attract a lot of love. A little bit into copper, but it's been patchy, I think. If IPOs are any barometer, I can't, off the top of my head, I can't think of any junior resources IPOs that have happened so far in 2025. We've got sort of sub 10% allocation to seed equity, and there's at least one in that in our portfolio that's hoping to IPO in the next 3 months. A gold company, and there's another one that's much more common, I think, at the moment, RTOs. But as a barometer, which I think it's not a bad barometer, the level of IPOs, it's still very low.
That's an interesting point, right? It's like for one reason or another, a bull market always ends in a flurry of IPOs. That's the final chapter of it, but we're not there yet. So you'd assume there's legs.
You'd think so. The last at the start of COVID, there was something like, I think it was over 100 junior IPOs in that year. And that was, I put that largely down to, very low interest rates, particularly out of the US, but globally. So there was more speculative money, available in general. And, some of that went into the junior resources sector. So, that's that's the big question as to if and when rates, particularly in the US, are going to get cut. And then I think, as rates come down in the US, we'll see more love in the sector as a general rule.
I've got to ask, John. If I met just an ordinary kind of, I don't know, finance person in the street or on Collins Street or whatever, and I said to them, I know a fund manager and his strategy is investing in a portfolio of exploration companies, and his performance for the last 5 years is 34%. They think I'm dreaming. Like, there's no way you can get those sort of returns with a diversified portfolio of exploration stocks. It's like it's a head scratcher that the strategy can actually be kind of employed and have kind of consistent outperformance and returns. What does the layman not understand about your strategy that actually that kind of underpins the alpha?
Look, I think when we do have winners, it's a combination of picking a stock with generally some great exploration results, which are then released into a market that's receptive. So AusIMM Minerals, great example for us, one of our best ever investments. Great exploration results in lithium spodumene in the Pilbara at a time when the lithium market was white hot. So we can't control either of those factors really as to whether a company's going to have great exploration success or the market's going to be there for a particular commodity. But we can make our best estimates and try and if you like, place our bets. And I guess it's what we can do, which the man in the street can't do, is take a portfolio approach. And because the fund's relatively small, $60-odd million of assets under management, we don't have to put the whole fund on black, if you like, to move the needle. So it's a diversified approach, and we hope that one or two of our stocks shoot the lights out every year.
John, how have the terms in which you invest in companies sort of ebbed and flowed, and where are they kind of at the moment? What I'm kind of getting at is, when the market is tougher for companies raising, you can price things to your favour a bit better, and vice versa. Where are we at in that cycle?
Yeah, look, I think it's interesting, when the market's down and the generalist investors aren't looking at the sector, then I get a lot of calls, from everyone who's raising money. And when the market's flying high, I generally get a few less calls, and it's harder to participate in placements. But I think generally those placements are done at higher prices, and it's not such a big deal if we do miss out. So as I often say, sometimes the placements where the company is really not wanting to suffer the dilution, it's trying to minimize it, it's just doing everything it can to avoid that dilution. They're the placements that you really want to participate in if you think the market's about to turn.
If I kind of peel into some of your gold exposures, there's no shortage of gold junior mining companies on the ASX. In fact, there must be more like junior gold companies than any other subsector of a type of company out there. But how do you, what's your kind of, I don't know, filter for getting rid of all of the noise very quickly and focusing on what's actually investable amongst that?
Yeah, look, I think we do like the micro end. So I guess if something's generally north of 200 million market cap as an entry point, then we probably missed it. That's just a general rule. So we can sort of filter that a bit. Not to say we're not interested in those companies, and we certainly do have companies that have grown well beyond that point. And then a quick filter on commodity, and then you sort of, if you're still interested, then you're sort of drilling down. Or what does the metallurgy look like? What do I think of the exploration potential? And in particular, what do I think of the management? So Yeah, look, you can do that reasonably quickly, and then hopefully you've winnowed through to out of the must be you're right. It's probably 400 or so listed ASX gold companies, and a lot of them, we put them into buckets by commodity, and as gold has gone up, a lot of the ones in the lithium bucket have become, or the nickel bucket have actually switched into gold. So there's probably more. Look, you can winnow it out reasonably quickly, but there's no way you can look at them all. That's beyond a small fund like us.
And how do you kind of think about just maintaining your exposures to different commodities? Like Trav said, quite a heavy exposure to gold, and you mentioned that's grown naturally as these companies have just sort of grown, but that can go kind of both ways. How do you think about keeping it sort of in check so you see more of the upside than the downside?
Yeah, look, that's our job, to try and identify when we need to be countercyclical. Our exposure to battery minerals and metals is very low at the moment as a percentage, but potentially now's the time to be picking up a bucket load of shares in good companies for even when those markets do turn, like nickel or lithium or other battery type commodities. So that's while we might look small, these companies can grow very rapidly, and that exposure to a particular commodity can change very quickly in our portfolio.
I'd love to I can't articulate that process. Maybe using a couple of the big runners that you've had in the portfolio and that are still in there. Like the biggest allocations other than cash at the moment are Astral and Medallion Metals. And like at what point? I mean, both of them are relatively advanced in the context of being gold projects. They've got studies on, the resources are well defined, all those sorts of things. But at what point did you kind of make the assessment? This looks very undervalued at the moment, and I'm happy to get exposure, knowing pretty well what's in the ground. And subsequent to that, why have you not trimmed the position now that they've really tremendously re-rated?
Yeah, look, both of those examples we've been in for at least 3 or 4 years. I think we've participated in most, if not every, placement they've done over that period. Medallion, for example, I think our first entry point was at 25 cents, where it is about today, but it's been down to 5 cents and now back again. So it's important to participate in placements as the share price falls, if you still believe in the company, so that your returns actually on that one look very nice. Talking of trimming them, I think what we're seeing, both those examples, if you plug in, develop your own cash flow model and you plug in your anywhere near current Aussie dollar gold prices and perhaps copper prices in Medallion's case as well, you're still seeing multiples of the current enterprise value as an NPV. So as they move through feasibility and into development, typically we would be trimming some of it, but both those companies have relatively short permitting horizons and relatively low capital hurdles. So that valley of death, if you like, in the Lassonde curve should be relatively benign for those companies. So we may well hold them because we do see such good value out the other side.
It's really, really interesting, John. And I'm really curious to ask you as well. The biggest company by market cap in the portfolio is Ramelius. That, is a massive outlier compared to a lot of the other companies that you hold, in that it actually produces gold.
Is that a legacy from your Musgrave holding?
Correct. Yes.
Yeah.
So, we thought Ramelius got a very good deal buying Musgrave, and that's, been borne out. I think, the ultra high grades that come out of Q and are going through the Checkers plant up at Mount Magnet are bearing that out. But yeah, look, it's not a natural holding for us. But it's sort of like a cash proxy. We regard it's very liquid relative to our other portfolio companies. There's still we still think there's upside there. But we have been trimming some Ramelius along the journey.
Very, very interesting. And if we go to another continent for a moment, Predictive is another one in there that is, I guess, in between a couple of the different styles in which you play, in that they're getting closer to a potential outcome or takeover. What's the sort of thinking in your mind of exiting the name, or how the next year could play out?
Yeah, look, there's a bit of patience required now, I think, with Predictive. Something may happen in 2025, but there's a bit of a poison pill for Perseus if they make a move before 31st December this year, in terms of having to pay part or share the profits, or share the upside beyond, I think it's 21 cents with the group that they bought. They're 17% now from. So, I don't think Jeff Quartermain is, motivated to make a move in 2025. But, we've got Zijin and Lundin Group in there as well, with, almost identical percentage shareholdings to their shareholding in Montage Gold, which is building a 300,000 ounce per annum gold project in Côte d'Ivoire in West Africa. Excuse me. So, look, never say never, but I would think it sort of trades with the gold price at the moment. So I would think there might be a bit of a lull, in corporate activity until the end of the year. But who knows? I know there's, the company has said there's numerous parties in the data room, quite a few out of Asia. So yeah, they may be happy to jump the gun.
Some of the bidding wars out in West Africa in recent times have been quite interesting to say the least. What are the juniors in that part of the world that get you excited? I know there's a few we've sort of spoken about in the past. There seems to be less than there has been previously, but are there some that come to the fore?
Yeah, look, we've got a number. We sort of are focused on Guinea and Côte d'Ivoire. They're probably a couple of the best mining jurisdictions in West Africa at the moment. Guinea, obviously, very long history of bauxite production, and about to become a major iron ore producer through Simandou. And gold, there's quite a strong history of gold there as well. So while there's been political turmoil, the mining industry has really gone on largely unhindered. So we like it. We've got Predictive, obviously. We've got a Canadian company in our top 10 called Sanu Gold, which has got some great projects up near the Siguri mine, operated by Anglo. Anglo's on the register there. Montage are on the register. I think Zijin are also on the register. So it's got a share registry sort of to die for from West Africa. We like that one. We are in a company called DeSoto in Guinea. That's Paul Roberts, the discoverer of Bankan and the founder of Predictive Discovery. That's his new vehicle for Guinea. So yeah, we like the ground that they've got. It's very early stage, but great team. And then in Côte d'Ivoire, we've got Aurum from the takeover of Mako Gold, and that's Kaigan Wang and his team ex Tieto. So they're just drilling their project like Swiss cheese with very efficient Chinese rigs. And we've got a number of others, African Gold, which Montage is now actually operating. You know, that name keeps on cropping up in West Africa. They're sort of following us around, I think. And a couple of others in Côte d'Ivoire as well. So yeah, that's what and they're all, sorry, we are in Arrow Minerals, which is focusing on bauxite in Guinea, but all the rest are gold companies.
What do you read into that very clear trend of Montage picking up these stakes in juniors that have a line of sight to a couple million ounces of gold? They don't even have to kind of have it yet. It's just line of sight, and all of a sudden they pop up with a decent chunk of the register.
Yeah, look, I think they haven't said this publicly, I don't think, but I think they're planning to be a consolidator and possibly be the next Endeavour Mining, which has been one of the big players in West Africa over the last couple of decades.
Yeah, it'll be very interesting to watch. I mean, having a combination of Lundine's NZGin backing them is a bit of the East and West together.
It's a really intriguing one. When you think about the potential takeover or the potential acquirers, and you kind of compare that to 5 or 10 years ago, is it more and more and more slanted towards Russian and Chinese companies, or am I overthinking that?
Yeah, look, I think that's one thing, that being offshore, if you like, in places like South America and Africa, does allow those players into the M&A space. So while I think there's still quite a substantial discount on a per ounce basis, call it African discount. If you've got a project here in Australia, basically there's no new Chinese investment coming in. So that's sort of off the table. Whereas if you're in West Africa, you do have access to that sort of capital. So yeah, look, I think it is becoming more and more Chinese dominated, but wouldn't rule out Perseus being they are very active. Obviously their major operations are in West Africa. So yeah, they're still very much in the game.
You can't finish a bloody African mining segment without a CRE insurance plug, as the bloody African mining insurance experts, African mining experts, insurance broking experts. Two separate things, but that's why they're like an absolute freight train in mining insurance. I was going to say the Titanic of mining insurance, but the Titanic sunk, which CRE insurance will never, with the bloody presence in Sydney, Brisbane, Perth, Orange, all covering everywhere around the world in mining insurance and bloody everything insurance broking. Jesus Christ, what more do I need to say? What
more do you want, Matty? Speaking of underwater, I did see 29 Metals announced just recently that after 2 years of debating their insurance claim, they've finalised their insurance claim. They're going to get an extra 61 million. It takes total gross proceeds from their insurance claim to 115 million. Unfortunately, in the same period of time, the last 2 years, share price is down 94%, and they've had to raise twice as much money in new equity from dilutive equity issuance. I'm not saying it was avoidable, but imagine if they had have taken a free CRE policy review before that weather event. You never know. Things might be looking a lot more rosy.
Might have had another zero on it. They might have got paid out $1 billion.
Better to be safe than sorry.
You'll never know, JD. Right, let's go back to Johnny Forwood.
Where are you still seeing like pockets or opportunities of where there's really attractive value, John? I mean, some of the gold's hot right now, but is that flowing all the way down? And what kind of opportunities are on a relative basis, more attractive right now than others?
Yeah, look, I think one sort of broad area to talk about is North American listed companies.
Yeah,
we have started to see movement there. I mentioned Sanu Gold; they're probably up sixfold in the last 6 months. But partly because, there's recognition by some really, high profile investment groups, mining groups. But I think as a general rule, the Canadian listed stocks have lower valuations than Aussie listed stocks, and we're still seeing a number of Canadian companies with great projects, coming through Australia, investigating, whether they should be looking at a ASX listing. And in particular, I think, we'll write down, from, the Snowline gold sitting on 5 or 6 million ounces in the Yukon down to, that's a standout, and they came through with a page in their presentation comparing their project, the Valley project to Hemi, De Grey's project has been taken over 5 billion.
Yeah.
And I think Snowline are trading at about 1.2 billion Canadian, and it's definitely, some advantages to Snowline's project. So,
what's the strip ratio on it? It's like you're digging into the ore body straight away.
Yeah, it's the ore body's shaped like an
open pit. Amazing. Yeah, but obviously there's other factors, that the First Nations stuff, and obviously the tragic heap leach event that happened in the region not too long ago.
Yeah, the Yukon's still coming back from the Victoria Gold issue, but that's certainly one. But that's sort of the bigger end, but also at the smaller end, there's numerous little explorers that just look super cheap relative to where we sit here in Australia.
One of your predictions for 2025 was that we would see more and more of these TSX and TSXV companies come and list on the ASX. Do you think there's a sweet spot or a window where these deals are attractive and then the quality sort of deteriorates? Is that a concern you have?
Look, there's certainly, if you're an Aussie and you're looking at Canadian projects in the Abitibi or, Val d'Or or whatever, there's, as Tony Manini's pointed out, there's a lot of million ounce deposits that are, might have been mined back in the day with a shaft or two, and they're just sitting there, and they're trading at, very low per ounce values. So, from an Aussie point of view, geez, wow, that's really cheap. But, I think when for example, Firefly, is it, who, went into Canada, picked up the Pickle Lake gold project, had, multi-million ounces to it, but it was all inferred. It was very deep. And then they sort of used that experience and, their script to go and apply them, acquire the Ming project, copper project, super high grade, beautiful looking copper project in Newfoundland. So I think maybe you could say they paid a few school fees, worked out, perhaps this gold project wasn't exactly what they wanted, and then upgraded, if you like, to a what looks like a fantastic copper project with an existing permit, existing mill, underground infrastructure. So yeah, look, I think you're right. There are, there can be hairs on the dog. You just don't want to sort of rush in and say, wow, that's a million ounces. Let's get it cheap, because then it may be, very hard to take it forward.
Mm. It's so tempting to think that you're onto this like relative bargain when you're looking at assets on the other side of the globe, but it's not your home court. And in fact, oftentimes when you're shopping in someone else's home court, you end up second fiddle because someone else runs the ruler over you. But it's not to say, like, plenty of people have had success with that strategy. Unfortunately, a lot more people have had bad outcomes with that strategy. Yeah,
that's right. I mean, you're sort of torn, as a general rule, the low valuations versus, what does Rumsfeld call it? The known unknowns, or the unknown unknowns, of going into a completely different part of the world.
In Australia, are there pockets of value still compelling?
Look, I think areas that have perhaps been overlooked or forgotten, I think the Mount Isa block, has got a lot more to give as a general rule. On generally for copper, but also gold. Yeah, look, Victoria is an interesting one. Just, my home state just granted its first mining license in living memory. Is that the
VHM?
That's the Goshen project, which is rare earths and traditional mineral sands. So, number of factors there. Victoria is broker than any other state in Australia. Plus, rare earths is obviously a very political thing, and there's probably quite a bit of pressure from the feds and from the US to permit these things. So
it took them until they were broke to permit
correct.
a mine. It's quite amazing, isn't it?
Yeah, but the same thing's happened in New Zealand. I think the state debt of Victoria is about the same as the national debt of New Zealand, and there's been some real progress in Z in terms of permitting.
They had a change in government as well, as I understand, which has really sort of spurred it along, and seen them announce this sort of fast track project to allow some projects to kind of speed through permitting. So yeah, I mean, there's some projects there. Are there projects that have caught your eye in New Zealand on that point?
Yeah, look, we haven't got any investments there, but obviously the Santana project, beautiful looking project, and moving through the gold development opportunity, moving through permitting, looks to be going pretty well. So and then that geology, there's a lot of it in the South Island in particular. So there are other opportunities there.
Got to ask you about some of the more speculative names in your portfolio, John. And I mean, you're a geologist, so you'll be able to speak to it in a not so speculative way, I'm sure. But the likes of Koonenberry.
Oh yeah, look, that's a beautiful portfolio of Macquarie Arc, Acadia potential targets. They've got everything from a joint venture with Newmont at Junee, which has got some beautiful geology, some really interesting hits there, right through to different style of geology, but this sheared granitoid zone up at Enmore, which has really set the market alight for them. So that's and a great team based in Orange in New South Wales. Some really good geos there. So there's a hell of a lot to like about it. It's up sort of 7 times from the placement that we came into. I think it was late in the second half of last year.
It's not a bad return.
Really, really nice. Look, I think that portfolio, they're spoiled for choice. I think they've done the right thing in terms of focusing on one project and not sort of diluting the market's attention. But there's probably, I don't know, there's probably 2 or 3 companies that could be spun out of that, with those assets they've got, and they've got all this data, all these results which have never been released to the public. So yeah, they've got a great pipeline of ASX releases as and when they should choose to do that.
Nexus Minerals.
Yeah, look, Andy Tudor, he's my old boss actually. I've got a long history with that part of the world and Saracen and Carosue Dam, etc., going way back when. So I really like it, in terms of the geology, and they've got both. They've got potential, very low capex toll treat opportunity, and which there's up to 300,000 ounces that could go through Carosue Dam, but there's sort of 70 or 80,000 ounces that are much higher grade with lower strip ratio that could be trucked a long way, back to Cal and onto Coolgardie potentially. So you've got that sort of underpinning value, and then you've got all these new air core targets that they're working up, and it's amazing that some of these areas have never been drilled. Along strike from Walbrook and Porphyry and known deposits. So yeah, they're hitting it hard with air core or percussion drilling at the moment, and yeah, I expect them to add to their resource, if not mineable inventory, substantially this year.
Your point on truckable distances is a really interesting one, John. I've heard you speak about it briefly in the past as well. Be keen to hear you just dive a bit deeper into that, and very interested to hear if there are any other aspects, given the real step change we've seen in gold, that investors might not be completely taken on board.
Yeah, look, I think there's a number of companies that have been turning fairly modest gold deposits into cash. Auric Mining is one that I've been speaking to quite a bit when on the site visit with those guys last month. And yeah, the economics just seem to get better and better for trucking. Apparently there's a lot of trucking capacity out of Kalgoorlie haulage. And with oil price falling after Liberation Day, while the Aussie dollar price has also fallen, I think our benchmark at Tapas is relatively low in terms of the 5 year. You're looking at a 5 year time frame. So yeah, that's a saving as well. So yeah, dig and deliver is looking good, and I think at some point, should this situation continue, then these half full or partly filled mills are going to get filled up either with third party or that has been sitting on waste low grade stockpiles for a while, that's owned by the mill owners. So yeah, I think it's going to be first in best dressed to some extent, and then the high gold price doesn't just turn on stranded assets. There's other factors. There's things like metallurgy, refractory or partially refractory ore. Now, which might have been looked at as uneconomic in the past, now looks much more attractive. I think Hemi was an example of that. I would say 15 years ago, if Hemi had been discovered, part low grade, partially refractory, the market would have gone ho hum. But in today's gold price, that fairly lowish grade deposit with partially refractory, the market's really loved it.
Yeah. How do you weigh up your I guess your interest in those like maybe modest deposits which now have a pathway to cash flow, and that's a really meaningful economic generator for a small or for a micro cap company, versus the more longer dated production stories, but they have like a more formidable kind of production story behind them. Something you've been invested in for a long time is Saturn, I believe, but that's not going to be producing until like 2028 at best, sort of thing. So yeah, how do you kind of weigh up the two kind of horizons to cash flow?
Yeah, look, I think if there is a long dated production, then it does have to be big and exciting in terms of scale. And Saturn, it's big, it's low grade, but we like it for that reason, because it's a great option on the gold price. And Saturn just in the since it raised money at 21 cents, I think it was up at 32 odd cents today, just in the last few weeks. So it has responded to the gold price moves. And similarly, something like Caravel in the copper space, huge deposit, very low grade, but these things have got very attractive metallurgy, and are well located. So those two companies, Saturn with gold and Caravel with copper, offer great leverage to the underlying metal prices.
If we look at some of the other copper names that you've mentioned in the past, New World Resources going over to the States. Are you a bit more hopeful that permitting and all these sorts of things in general in America are sped along and New World can be a beneficiary?
Yeah, so New World are reporting, some really positive changes on the permitting front. They weren't listed in the 10 initial fast track projects that came out of the White House last week, I think it was, or earlier this week. But yeah, they don't really need to be, because they're sort of on the fast track anyway, expecting all permits to be in place sort of Q1 next year. And they're actually planning to start pushing the decline down ahead of that, because they're permitted to do that. So yeah, look, very positive. So long as Elon Musk hasn't sacked everyone in the administration that's required to actually sign the permits. I think it's it's been a very good thing on that front for American or US based projects.
And are you still excited then on an exploration front for those guys specifically, because it sort of starts to get into that development area?
Yeah, look, they have sort of scaled back on their exploration, but there's some great opportunities right within the existing ore body at Antler this is in Arizona, but also they picked up a very nice exploration portfolio within satellite tracking distance of Antler. So and there's some great targets to be tested on that. So yeah, look, I think that is the key, that we've seen, companies, say like Spartan, for example, maybe like Firefly, to keep the exploration excitement going while it's almost a, look over here, don't look over there, while they're doing the development, and sort of, and then go, hey, presto, we're actually mining now. Spartan said, we're doing this exploration decline. It's a production size, but we're just, we're doing it to get drill access. But really, it was sort of a bit of a surreptitious way of advancing development while still keeping the exploration excitement in the stock.
It's all about the spin.
Absolutely. I can't help but notice, representations of some more niche sort of commodities in your portfolio. This one's not too niche, but silver. A lot of silver bulls are kind of speaking up about the excitement that there could be in the silver market at the moment, especially because gold's run, but silver's got legs.
Your prediction as well, John, for the best performing commodity of 2025, silver.
Right. I think it's got a bit of catching up to do with gold.
Well, it moves faster when it does move, so yeah, I wouldn't rule it out yet.
Yeah.
How are you playing it?
It's very interesting. Like last night, when gold jumped to 3,500 US an ounce, on the sort of the Trump belligerence towards Jay Powell in the US Fed, gold jumped, silver didn't move. But when Trump sort of backtracked on that rhetoric, gold came back, but silver actually moved. So I take it from that and copper recovered at the same time. I take it from that silver is still largely trading as an industrial metal. It's not trading as a precious metal, and it's sort of decoupled from gold, whereas normally it would be more volatile than gold, and when gold goes up, silver goes up, twice as much, and vice versa. Silver's trading at a very high or very low, gold silver ratio of 100 to 1. In fact, got well over that. So, we normally would think of it long-term being at about 65 to 1. And when silver really takes off and starts trading as a precious metal, it's down in the sort of 35 to 1. So, if that were to happen, silver today is, $32, $33 an ounce US. you're looking at north of $50 an ounce for silver. So yeah, I think that's still possible, although, one of the big drivers of gold has been central bank buying, and that doesn't apply or hasn't applied to silver as yet. There obviously is, in gold, a geopolitical premium, if you like, for all the conflict going on around the world, and you would think silver should be able to piggyback a bit on that, but I think one of the big factors driving gold has been central bank buying, and that's been absent from the silver market.
Final question from me, John. I guess a bit more philosophical about the industry and the specific part of the industry that you've spent so much time watching and investing in. Is there something that you think in the junior end of the market we need to see more of, like a trend that may have started already, something you don't like that you think we should see a bit less of? If you could make sort of changes from above on the market, is something there that comes to mind?
Yeah, look, I think in Australia, I think one thing, we talked about IPOs earlier. I think it has become much harder for junior companies to IPO. And that's, maybe it's not such a bad thing if you compare it to North America, where there's several thousand junior companies, and the compliance is arguably a lot easier and cheaper. Maybe it is a good thing, but in Canada they have a quite well developed third board, if you like, called the Canadian Stock Exchange, which has got, I think it's a couple of hundred resources companies on it, maybe not that many. Whereas in Australia we've had the Newcastle/National Stock Exchange, which really hasn't functioned as anything effective way to raise any substantial amounts of cash. So I think that's one thing I would like to see, the ability for companies to get listed be slightly easier here in Australia. What else? Of course, permitting is in parts of Australia, and you can't just say it's one state's bad and one state's good. But yeah, as a general rule, permitting has become much, much harder, and the overlays of things getting kicked up to the feds, like the EPBC process, etc. Yeah, look, there's no company that I've spoken to who says, "Oh, we really love our permitting." It is prohibitive. If you got examples of companies wanting to do $100,000 drill program and having to spend $200,000 on heritage surveys, it just doesn't make sense.
Yeah. The last one from me, John, is what's the fastest time it's taken for you, like from the beginning of a meeting with a company, let's say the beginning of the Zoom call, the beginning of the meeting, for you to know that you were not going to invest in that company?
Not going to invest. Look, sometimes before you even start, just taking it to be polite. But yeah, there are a couple of presentations where they get 5 minutes in and you're sort of shaking your head, going, "And this is dreadful." What are the usual overvalued or
what are the usual kind of tells that immediately make it kind of a no go?
Look, I think one, in the past, and this is sort of going perhaps opposite to what I've said earlier, but when companies come in and go, "Oh, we're going to get this into production, we're going to use the cash flow to explore our project," and it's pretty rare to see that happen. So that is always a bit of a amber light for me, particularly little guys who haven't got any experience in getting into production. Yeah, I think, and some of the boutique metals, they're always very tricky, and just pulling quoting the price from headline price of a particular metal, when you know that actually that company won't be able to realize that price if they do get into production. That's also a bit of a red flag.
Fantastic. Always great to chat, John. Thanks for coming on Money and Mine again.
Look, absolute pleasure, guys. Really enjoyed it, and hope to speak again sometime in the future.
Thanks, John. Hooroo.
Sensational. Thank you, Johnny. Thank you, Lowell Resources Funds Management. These bloody funds just make your name shorter. Pretty sure that I got that correct.
I think you did. We can extend
Just
the
Lowell.
thank yous.
Yeah.
GRX, get your tickets, May 20 to May 22nd. Maddie's going.
Mate, can't wait. Brisbane, come say good day. Let's go to the bloody, Fortitude Valley.
That's it. Discounts in the show notes.
Yes.
Also, a massive thank you to Mineral Mining Services, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, WA Waterbores, Quattro Project Engineering, KCA Site Services, Black Diamond Drilling Services, and Cross Boundary Energy.
Thanks for I don't have to scroll at the bottom, JD. Thanks.
Hooroo.
Mate. Cheers. Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.